Hey everyone, welcome to the Xapo Talks Bitcoin loans and flexibility talk. Just letting you know that we can see you online. We'll start for real in about 2.5 minutes. So thank you for joining us. I'm going to make these announcements every half a minute or so, just to let you know we're still here.
Thanks, Ian. My side, I just want to do a quick mic check. Can everybody hear me okay?
Coming in loud and clear, Joe.
Excellent.
Hey, got a few more joining now. Hi to everyone who's just joined the Xapo Talks space for Bitcoin loans and flexibility. Will be underway shortly. We're going to start in just over a minute. Just saying hi to you guys that have joined us. We'll start soon. Okay, got a few more coming in. Thank you for joining us today. I feel like we need some background music or something like that just to let you know you're in the waiting room for the Xapo Talk session. We'll be starting very soon. Myself and Joe will kick you off in probably about 20 or 30 seconds. Okay, let's get started. Quickly for the team, if we can get Piotr's microphone permissions changed. Everyone else, thank you for joining us. Hi, everyone, and welcome to the first edition of Xapo Talks. This is our new monthly AMA series where we're taking you behind the scenes of Xapo Bank. Quick welcome from me. I'm Ian Horne, head of content here at Xapo. I'll be your co-host today. I've joined the company quite recently, so it's awesome to be doing this. For those that don't know me, I've got experience in the fintech space. I used to be the head of content at Money 2020 for anyone that attends that event. And I wrote the book Why DeFi Matters as well. So I've been following the space for a long time. Awesome to be working with Xapo. I'm joined today by Joe Eppel, our product manager. So Joe and I are going to co-host today. We'll try and get this thing moving at speed and get all the conversational points going that we want to go through. We've got a great conversation today all about borrowing with Bitcoin and Bitcoin Bank loans. And these sessions, we're going to be basically doing these each month from now on. And the plan is to sit down with the builders, the thinkers, and the innovators behind the products that you use, and also talk generally around Bitcoin and crypto, most specifically Bitcoin, to be honest. Anyway, Joe, I said you're a co-host, and then I just carried on talking. So let's bring you in here. Joe, it's great to be co-hosting with you. Can you tell the audience a little bit about yourself and what you do at Xapo?
Thanks so much, Ian. Can confirm it's pretty exciting and awesome to have this talk series going. On my side, I've been at Xapo for just over 2.5 years. I'm in the product team, and I look after what we call the customer acquisition and onboarding team. So basically working closely with marketing to get people into our product from all over the world, as well as get them onboarded safely. Yeah, that's me, and really looking forward to this chat.
Awesome. Thanks, Joe. So as I said earlier, we're talking about borrowing against your Bitcoin today. This is going to be a conversation in 4 parts. We'll break it down, keep it manageable for you. We're going to introduce Bitcoin-backed loans. I realize for some people, there's probably a bit of context needed there. Then we're going to walk you through how we offer them at Xapo. We're not going to go too hard on the push. It's more, on a product push here, it's more about explaining to you the dynamics and features of what we do and how we make it work in a way that is, responsible but effective. After that, we'll talk about risk, safety, and flexibility, which of course are crucial things. And then we'll talk you through features in our roadmap so you know where this whole thing is going and what we plan to do in the future. And to finish, we'll run through some of the questions that have been sent to us prior to the conversation and questions that we've heard as well while working on Bitcoin-backed loans. So Joe and Piotr, who's joining us, have fielded a lot of questions on this already because people want to know what we're doing exactly. So Joe and I have kicked us off, but for this conversation, you've got used to hearing my voice, but from now on, you're largely going to be hearing from our very own product manager, Piotr Bedkowski, who is going to unpack the whole topic. And Piotr, it's great to have you with us. Can you set the scene a little bit? So why are we talking about Bitcoin-backed loans today?
Yeah, absolutely. Thanks for having me, Ian. Actually, I wanted to kick off a little bit with setting up the scene a little bit. Why would you borrow against Bitcoin instead of just selling it? I read some comments before this conversation, and I think lots of people in this survey answered that they don't have any loans at the moment. They're not borrowing against Bitcoin or not ready for this just yet. So I think it will be useful for everybody here to sort of look closely at why it makes sense in general to borrow against Bitcoin, and why it also may be a good time to do it now. So let me just unpack that a little bit. Lots of our members especially long-time Bitcoiners, they are Bitcoin maxis and people who got into Bitcoin pretty early, in 2013, 2015, 2017. But then as we progress through time, they see this everywhere, and we see this principle that everything eventually goes to zero against Bitcoin, and that's how we call it in Bitcoin space. You look at the gold, you look at stocks, you look at real estate, it basically all goes to zero, right? Once you start denominating in Bitcoin and looking at different prices in Bitcoin, I think even few days ago we recently posted, how the Apple stocks performed versus Bitcoin. And nominally, Apple stocks for the last 5 years, they're a great investment in USD terms. But then if you compare this to Bitcoin, then all of a sudden, you're basically losing money, right? It's down against Bitcoin. So seeing this, you don't want to let go of that best performing asset of 21st century. I mean, the CAGR, the historical returns on Bitcoin, what is it? We can debate, is it 40%? Is it 50%? But it's way more than anything else out there. Now, so once you take hold of this asset, you never want to let go of that asset. And I always think of this as, there is this powerful narrative from Michael Saylor saying that this is like buying, a piece of land in Manhattan in New York. So what would be the great idea? When would be the best time to sell the piece of Manhattan, right? And the answer is never, basically never, because it's going up forever and it will go up forever. It will continue to appreciate. It will continue to appreciate in value. So now, having established this, now what's your alternative if we really don't want to sell? And the alternative is borrow against Bitcoin, right? There is also additional things that make a Bitcoin really super collateral as compared to other forms of collateral, because, asset-backed lending in general, like borrowing against stocks, against ETFs, against the, remortgaging your house and what have you, this concept is as old as civilization. Like, banks have been doing this for years. So now this is just, we are applying this TradFi concept and bringing this into the Bitcoin world. And with Bitcoin, it's even better because Bitcoin is a super collateral. It has all those great characteristics that your house, real estate, stocks don't have. It trades 24/7. We have instant price discovery. We can, at any second, we can tell how much your collateral is worth. There is a full market liquidity, is super liquid, right? It's divisible. So we can divide it into smaller units. We can precisely collateralize loan, right? Because it's divisible. It's flexible. It can be, sent, moved, etc., locked up in the vault. It's durable. It doesn't degrade in time, unlike real estate or cars that need maintenance, etc. And finally, it's fungible. So any Bitcoin is as good as any other Bitcoin. So now, once you have all those characteristics that make Bitcoin a super collateral, now it's very interesting if you combine those two concepts and now provide the market with a product that allows you to borrow US dollars against this super collateral.
Got you. And quickly, Piotr, I should do the classic, this is not financial advice disclaimer for all of this, whether you're trying to purchase Bitcoin or a plot of land in Manhattan, whichever it is. But we're obviously very careful about what we do here. I think the kind of comparison that you're drawing here, Piotr, is between lending against Bitcoin versus selling your Bitcoin. And I don't think many of the listeners here will need much of an education on this, but obviously, why would you not want to sell your Bitcoin in a scenario where you need instant liquidity?
Yeah, so just to give you a perspective, the selling Bitcoin comes with its own drawbacks, right? You're missing on the future upside. It may trigger the taxes depending on your jurisdiction. It's also a loss of control over the best performing asset, and well, it doesn't make sense to sell it, as I said before. So just to give you some perspective, when we launched the product, right now we have tens of millions of dollars in Bitcoin securing our loan book and the whole portfolio of our loans. Now, when we started out, it was at the beginning of this year, Bitcoin was what, 80K, 90K. Right now, it appreciated, and we are at 120. It means that collateral appreciated since we launched, or around 30% already. So this translates into millions of dollars of value that were sort of accrued, and that wouldn't be a case if the customers sold their Bitcoin, right? Because they would have missed out on all this upside potential. So I think that upside potential is the biggest one, where you stay invested in the asset, you don't miss up the potential upside. And again, one could debate where we are in this bull market right now, whether we are early or whether we are late already. But I think there's still some upside to be had there, and so that's why it makes sense to keep it.
Yeah, and I'm going to share something that you shared with me earlier today, Piotr, which was, you shared a comparison of the price of a home in US dollars versus Bitcoin. And obviously, past performance is no guide to future performance and all the rest. But in 2016, the typical American home would be purchased for about 664 Bitcoin. In 2020, that went all the way down to 45 Bitcoin. And in 2024, so last year, the average purchase price was 6.6, if I'm not mistaken. So we can see that kind of appreciation of Bitcoin as an asset, and we can see why there's a logic behind wanting to lend against your Bitcoin rather than to liquidate it. So I guess a massive question here is who is this for? Who should consider using a Bitcoin backed loan? What are the, perhaps a better question would be, what are the use cases you're seeing that people are actively using this for?
Yeah, absolutely. So on that note, I just wanted to mention that I had recently conversation with one of our customers, and he was basically saying that he sold Bitcoin for his house 5 years ago, and he spent on this house like around 120 Bitcoins, which in today's terms would be lots of USD, let's say. And now this house is worth what, seven Bitcoins, right? So just to illustrate how powerful that may be, and especially if you start looking through the Bitcoin denominated lenses. But on your question for the use cases, I mean, I've seen people. So let me start with this: around 40%. So a lot of customers are using this product to buy more Bitcoin and accumulate more Bitcoin. So that's while we are not encouraging, leverage, etc. That's something that we also need to acknowledge, that we are in the sort of Bitcoin gold rush, right? Where everybody's stacking, companies accumulating, governments are accumulating. You have all those Bitcoin treasury companies that are using that basically to expand and accumulate more Bitcoin. So that's one valid use case. I also seen the use cases, and this is for the actually bigger loans. So we've seen people buying houses in Europe with those funds. We've been facilitating deals like $1 million. I think we also facilitate, the biggest deal we facilitated was around $2 million for some property. So real estate is a big one. So either buying or renovating or investing in property, all of these cases. I've also seen some people, it's not an overwhelming majority, but let's say 10%, it's covering unexpected costs. And those costs can be anything. I mean, sometimes they just need the cash, they need 10K, 20K, 50K, whatever that is. And they go to us, they open Xapo app, and they just either get new loan or just upsize the already existing loan. And so they get instant cash in seconds without selling even one sat. So these are some cases that we've seen so far. I think at some point this year, we'll also be expanding and offering this product to the corporations and institutions, so corporates. And here we are talking about even larger deals. So we are talking about miners potentially using us, and we are talking about $5 to $15 million ticket.
Yeah, that's really good context, and naturally we can see sometimes you need access to capital and you don't want to compromise your Bitcoin holdings. It makes a lot of sense. Joe, let's bring you in here because you're working on the product team as well. You're part of the team building this and working on it. Any thoughts or questions at this point?
Thanks, Ian, and thanks so much, Piotr. It's an incredible context you've set there, and I think the picture is clear. I'm curious. I mean, I know we've talked a lot about like the big numbers and the big kinds of deals we've been seeing. Do we see people borrowing small amounts as well to just pay for that like slightly unexpected smaller expense? What are the smallest sorts of loans that we've been seeing coming through, and are there any kind of anecdotes around that?
Yeah, so definitely we've seen smaller loans, so people testing out the product, so to speak, and they've been drawing down $1,000 to a few $1,000s predominantly just to test the product. And once they like the product and how it works and all the flexibility that it gives them, because it's worth to mention that this product not only gets you instant cash on demand once you're pre-approved, but also we have zero fee policy, so we are not charging any fees, unlike some other players in the space, right? So you can the only thing that we charge is only the interest is getting accrued on that balance. But other than that, there are no fees. And we know that those fees, historically been in a pain point, because you have all those like arrangement and setup fees, and then disbursement of funds can incur fees, and then liquidation fees, and then you want to repay early. You change your mind and you want to repay instead of in 6 months, you want to repay in 3 months or 1 month, and you need to pay now the fee because there was no prepayment period or something like that. We don't have anything like that because we really wanted this product to be simple and transparent and honest. Is the experience, I mean, we are all Bitcoiners here, and this is experience that we wanted to, it's sort of built by Bitcoiners for Bitcoiners, so we wanted to have an experience that we would dream of having that we couldn't find in the market, and now we have it in the Xapo app.
Great stuff. That's really helpful context, Piotr. And of course, we should dive into the actual specifics of how it works at Xapo as well. So we obviously have a fairly unique proposition. Before that, whoever is handling the Xapo Bank handle here, sending the reaction emojis, you are giving me life. Keep doing it. I am loving that stuff. Piotr, so let's actually get into the process for Xapo. What is it that happens? Because other people do this too, right? There are other ways you can borrow against your Bitcoin. But what do we do that makes it different?
Yeah, so right now, we are pre-approving the customers based on their hodling balance. So we are looking for hodlers, right? If you're a hodler and we can verify that, then we can pre-approve you for the 40% LTV. Now, the 40% LTV, that's very interesting because if you look at the other players, for example, then you will find in many places 50%, 60%, 70%, 80% LTV. Now, the problem with those kinds of deals is that the liquidation prices are quite high. And that means, in turn, that the liquidation risk is maybe higher than otherwise would need to be. Now, in our case, for 20% LTV or 40% LTV, you have a lot of space for Bitcoin price potentially to crash before you get liquidated. So those liquidation prices are anything between 20K right now to 40, 50-ish, okay? So that means there's lots of space and lots of time for you to act if, liquidation, if something were to happen in the market. And we all know how the, Bitcoin, like crypto market can move very fast. Especially given right now, geopolitical events and what have you, some systemic shocks that could happen, then it's very critical that you have this peace of mind that you're not leveraging, you're not going all in and getting liquidated, getting busted. You're starting with a low risk and lots of buffer. And any product that you can see in Xapo app has been engineered and built thinking that how can we remove any risk from that and how we can lower the risk for our customers. And this is no different. So we are offering 40% LTV. So that in practice means that if you're borrowing 4K, you need to post 10K worth of collateral. Now, there are some additional things that are interesting in our product specifically. So no rehypothecation is the big one, because historically rehypothecation was actually the risk of the community, and for obvious reasons, right? When you are pledging the Bitcoin to the third party, you want to make sure that they are not doing any funny business under the hood with their Bitcoin and not telling you. Which, if you look at the history of lending in Bitcoin space, BlockFi's and Celsius and FTXs of the world, then historically, the trust was really not there because and trust was breached, broken. So what we wanted to do is make sure that we are not rehypothecating, and this is clear to the customer that the only thing that Bitcoin does is actually securing this loan as it should be. So that's a proper experience that we would love to have ourselves, and we are happy to provide to our customers. I'm looking in terms of, I talked about the instant cash experience. Right now, the interest rates, we are very transparent about this. Our cost of capital is based on the underlying Fed base rate. So obviously the interest rates right now on US dollar are around 4 or 5%, right? So that's a base rate that you get from Fed. That's an opportunity cost or a risk-free rate in the US world, in USD denominated world. So we are adding some spread on top of this, and we are offering you 10% variable interest rate. And that's floating based on SOFR. So basically, it can be adjusted. It's not likely to be adjusted. It's mostly we are reviewing this rate, every time Fed convenes and they are deciding to change the rates. So it's likely, I think, with the developments towards later this year, those loans will even get cheaper, because I think the direction is that the Fed will start lowering the rates, and then all those loans will start using the lowered interest rates. So and on the collateral itself, maybe that's worth to mention also. Not only we are not rehypothecating, so this Bitcoin is not moving outside of Xapo. It's not being lent out for interest. It's not being put on the yield, so to quote unquote. But we are also reusing the same pieces that Xapo is and continues to be famous for. So institutional grade MPC custody is a big one. Historically, we've been known as a Fort Knox of Bitcoin. Some of you may have heard of this or remember this. At some point in 2018, Xapo was holding 1 million coins or something like that. And we continue to be this because we invest a lot of time and money into security. So for loans, we are basically reusing the same custody that we are offering normally on the Bitcoin side. So when you're just depositing to Bitcoin account or using Bitcoin Vault, we are reusing the same ultra secure military grade custody setup for your Bitcoin for loans. So this Bitcoin is not leaving Xapo at any point in time. It's just sitting there securing the loan. And I think this is the proper experience that we expect from the market in 2025.
Great stuff. Thanks, Piotr. If I can kind of just break that down for people, as you were saying, instant cash up to $1 million value for pre-approved members, loan terms between a month and a year, borrow up to 40% LTV, interest rates around 10% with zero fees, just interest, and we don't lend out your assets. And you can repay any time as well, no penalties for early settlement, which is a good thing. So, Piotr, is there going to be a fact sheet or an easy place where people can read this information? Because I do not expect people to be taking notes here and taking this home with them.
Yeah, that's a very good point. Let me drop the link to our website where we have a calculator that allows you to simulate those loans and also learn more about all the terms. That's a good one.
Great stuff. Okay, Joe, over to you. Oh, thanks so much, Ian. Piotr, quick question. I'm sitting in South Africa, where our prime lending rate is I think, if I'm not wrong, 10.75%. So it sounds like getting a Bitcoin-backed loan from Xapo is basically cheaper than a mortgage, in my specific context. But does Xapo have any restrictions on where we actually offer this feature, or is it available to anyone worldwide, regardless of any other factors?
Yeah, so that's a good one. So we do have restrictions, but these only apply for UK residents and Australian residents. So only those two countries. Otherwise, we are serving the whole world.
That's amazing. And it's the same interest rate and the same rules apply regardless of where you live. Is that correct?
Absolutely. That's also one of our principles, that we want to create products that are fair and honest to our customers. So we wouldn't differentiate between, this customer is getting better deal and that customer is getting different deal because they're on different jurisdictions. So we are treating all jurisdictions the same.
Fantastic. Back to you, Ian.
So maybe we could also talk a little bit about the potential risks and what to look for, right? I think that was interesting angle.
Absolutely. So obviously, I think the top of mind thing people might be scared about here is Bitcoin prices swing quickly, changes happen overnight. What kind of risks do we see our customers asking about? And also, what features do we have built and coming soon that maybe help users mitigate against those risks a little bit and sleep sounder at night?
Yeah, absolutely. So as you indicated, I mean, the main risk here for the customer, for the member, for you, is the price volatility, right? The Bitcoin historically is very volatile. One cannot deny that. And if Bitcoin price drops significantly, we may issue, and we will issue first, notifications and then margin calls asking for more collateral, or either partial repayment or more collateral. Now, we are offering the clear thresholds to give users time to act, and the whole experience is to keep you updated on what's happening. So we are not leaving you in the dark, and we will definitely reach out if the market is tanking. But at the same time, it's sort of your responsibility, and it's on you to sort of see and respond to us, right? In the sense that if something happens in the market and we will need the top up, then it will be good to have this additional Bitcoin. And that is also why we've been recommending to our customers and to other prospects, we've been recommending to have, it's a very good practice to have a spare Bitcoin. We call it quote unquote spare Bitcoin on the side for a top up if needed. So ideally, you don't want to borrow against the whole BTC stack that you have. You don't want to go all in. You want to borrow against a part of that stack, right? So in case there is adverse change in Bitcoin price, you will have additional Bitcoin to top up to keep this loan and not get liquidated. So that's one of the things that we saw repeatedly. It's good to have on the side that additional Bitcoin. The other is the time that it takes to liquidate the loan, and our biggest risk from a business perspective from this kind of product is the liquidation process, right? How fast we can liquidate. But from the customer perspective, we don't want to liquidate you at all, because the whole point of this product is to protect the Bitcoin, right? That's the whole reason you're borrowing, not to sell. So you don't want to get liquidated. And for that, we have lined up lots of features that are coming out later this year and early next year. We will have some improvements on the liquidation side itself. So that's maybe more under the hood. But we are also thinking about things like, auto top-ups of collateral. So features that proactively allow, automate that part. So you don't need to be contacted. It will be just automatically. If your LTV nears the level where it would be threatened by liquidation, we'll automatically pull some Bitcoin from your account and will top up to decrease that LTV and prevent the liquidation. So those things, of course, in the app, you can do it manually at any point in time. So if you open the Xapo app right now and go into the loan section, at any point in time, you can add additional collateral and lower your LTV. If that's the LTV that doesn't allow you to sleep well at night, and you want to lower that potential liquidation price because we will feel better, then you can do it at any point in time. You can just top up additional collateral. So some of those features we already have in the app. Some of those features are on the roadmap lined up to be added. And yeah, we are optimizing for never liquidating our members. and because that's the experience we would love to give to ourselves. And finally, on that note, I think if you look so far, I mean, we launched at the beginning of the year. We grown the product adoption was quite good, and we grown this part of the offering. Now, if I look at the statistics and I look how many Bitcoins were liquidated and what was their liquidation rate, so to speak, it's around 0.5% right now. So that means that, you know, almost we never triggered the liquidation on the when the Bitcoin price was dropping, because there was always a top up. The only case where the loan was not repaid, it was actually a customer who decided to leave it like that and not do anything about it. But there was a very specific situation. Other than that, you know, the liquidation rates, we have very, very low liquidation rates.
Great stuff. Thanks, Piotr. And I'm back now, having dropped off at a random moment, just to put Joe in the thick of it there. Just exactly what you want to do on the first one of these, right?
Oh,
so
good.
Piotr, all good. Yeah, sorry about that. It's a classic kind of first broadcast issue. Anyway, I'm back. Moving on to the final part of this. Well, before we go into questions anyway, Piotr, let's look at features and the roadmap, because obviously this is something that we're building out, right? We've got a product in place now, but it's going to get bigger and better. But to start with, what's live today? What are the things that, you know, we can do with a Bitcoin backed loan at the moment?
Yeah, so right now, you know, this loan experience that we have in the app, let's say you held one BTC in the Xapo app for 3 months, right? You automatically get access to the product, and we allow you to borrow up to 40% of that, like this, with no questions asked. You just open it. It's a few taps in the app, and you get your funds under. I mean, it's not an exaggeration, within seconds. Now, since then, so this is what we had so far. Now, since then, we've added some additional features to make the product even more attractive, because we listened to the customer feedback and what they wanted. And some customers were asking us for two things, basically. They were asking us for either for upsizing of the loans, so they wanted to borrow more, or they were asking for extensions of the loans. So basically, they wanted to roll over the loan, right? So they borrowed for 3 months, they wanted for additional 3 months, or they borrow for 1 year, they want to keep it for the next year. And so those two things we shipped. So far, we shipped the upsizing. So right now, if you have an active loan with Xapo, you can go inside that loan section, and within like 3 dots menu there, it's one action that you can do that you couldn't done before, is the upsizing of the loan. So basically, you can borrow more on an already existing loan. And it's very interesting. It unlocks so many use cases, because I've had the conversation with customers, and some of them were taking, I'm borrowing for my new house, right? And that's a loan itself. But then, 3 months in, I move in, I need to renovate this house. I need additional 100K or so. I need additional funds, right? I need this tranche. And literally customers were saying, in 3 months, I need this tranche, and 5 months down the line, I need this tranche, additional funds. So to cater to this use case, to give our customers the flexibility they need to draw down cash on demand anytime they need it, we introduced this upsizing feature. And it's also few taps. And then this customer basically borrowed their principal. They bought the house, and then after 2 months, they borrowed additional cash to renovate it. So it unlocks all the plethora of those possibilities not available before, where you have this flexibility. And I maybe it's super obvious. Maybe it's so obvious that I haven't mentioned it actually. But you can repay at any time. So basically, you can upsize at any time, and you can repay at any time. You have full flexibility. How much cash, how much USD you need. I've seen also people, thinking about using this in a sense. I don't want to hold any dollars. I just want to upsize each month to cover my monthly costs. Right, and they want to keep that credit line, and then they will want to roll over into the next year, because guess what? Bitcoin continues to appreciate in the meantime, right? So it doesn't make sense for them to sell the Bitcoin to cover their costs. It only makes sense to spend their weak currency, which is US dollar, and accumulate and hodl the strong hard money, which is Bitcoin. So upsizing is a big one, and upsizing, I haven't seen any feature before like this. It was just we just enabled it without telling anyone, and it's been millions in the volume. Now for the extension, so this one also is a big one, because some people basically want to roll over the loans. They want to keep it for longer. They want to repay interest and then roll over the loan, right? Because Bitcoin, ideally, the killer product would allow you to, keep this for 4 years, because this is the Bitcoin cycle, right? So the 4 years, Bitcoin will be higher, and that will be ideal. For now, we are solving in the way that you basically take a loan for 1 year, and then you roll over into next year, and then you roll over into next year, and you can continue to do this. Of course, what I'm saying is, and I think that was, previously stated, none of this is financial advice. It's not even tax advice. It's not investment advice. It's just things that we saw that people are using the product in that way. And so this is coming. So the extensions from the app are coming. I think we will also have a closer look at the interest rate, because right now, and that's triggering many people, but because this interest rate is double digits, it's 10%. If you look at other players, they are offering 11% to 15%. That's probably what other players would give you right now. The players, what I'm talking about, the players who are not rehypothecating, they're actually keeping your Bitcoin. We have those Bitcoin companies. So they would offer you around 11 to 15%. Now, we are offering currently 10.26%, but there is indeed an argument to be made. If Bitcoin is the best form of money we've seen, if this is a super collateral, then this loan should and could be cheaper, right? It could cost, maybe SOFR plus 3 percentage points. So maybe it should be 7% or 8% interest rate. And there is a good argument to be made here. And we will look later in this year, how to lower potentially this interest rate to get this into single digits area. But that's something I'm currently looking at, and what I could do. Obviously, I'm constrained a little bit on the our cost of financing. But I think there is some cutting that we could definitely do to make this product even more attractive. And as I said, finally, just wrapping this up on that, what's coming. We'll have a closer look at our liquidation engine and on all those preventive features that prevent the liquidation, right? So we'll improve our margin calls, and I think we'll add at some point the auto top-ups of collateral. So just to automate this part, so you won't get liquidated at 2 a.m. Sunday morning, because it will just top up from your account automatically. That's a great protection against something that you have little control over.
Yeah, thanks, Piotr. I think I should probably hand over to the questions that we've been sent in on social media. Before I do that, Joe, is there anything you'd like to add? Or has Joe lost?
Thanks,
oh, no, he's here.
No,
That's great.
Yes. I was just struggling to find
Joe
the button.
Joe is taking the loan right now.
Exactly. I was busy thinking how I can cancel this mortgage and save myself some money. I just have a newbie kind of technical question. So when you say extending your loan, is that basically because the price of Bitcoin has gone up and therefore my LTV has dropped to such an extent that if I wanted to go back to a 40% LTV, I now can take out additional loan capital, basically?
Yeah. So that's a very good point. Yeah, that's a very good point. So the LTV, maybe we should start with that even, right? So the LTV, the loan to value ratio, is the ratio of how much debt outstanding you have versus, the USD valuation of the underlying Bitcoin collateral. And as you said, as market develops and as we go more into the bull run, let's say Bitcoin appreciates 30% from here, right? So your LTV will decrease. Your LTV decrease, which means that either you can keep it that way, so you have safer loan, or you can upsize you can upsize and quote unquote squeeze additional dollars out of that and bring that back to 40%, because now your collateral is simply worth more. So in that sense, it's pretty flexible too, and very efficient to sort of get additional liquidity without selling your Bitcoin.
That's awesome. I'll be right back. I'm just selling my house quickly.
No, don't do that. It's yeah.
Yeah, we're back on the this is
All
not financial
joking, all
advice.
joking.
Joe, you got to quit threatening to sell your house like that. Anyway, back to the social media questions. Here's a very sensible question that's been sent in, Piotr, which is, how does Xapo handle regulation as rules tighten on BTC-backed loans?
Yeah, so that's a good question. I mean, the regulation tightens on Bitcoin-backed loans. I mean, you need to think about what the regulator, and we've had those conversations here because we are regulated in Gibraltar. We are fully regulated, so we have, very often touch points with our regulators. And anything, even for this product, for lending, we had to, apply for a specific license to do that, and we were going through the scrutiny and additional checking if we have everything in place. And what the regulators are looking for is basically the answer for the question, which is, are you guys giving those loans to the people that you should be giving those loans to? That's as simple as that. Because what they want to avoid, they don't have a problem with someone having, 10 Bitcoins and borrowing against 2, and buying, buying whatever they need to buy with that. They don't have a problem with that. What they do have problem with is basically someone buying Bitcoin yesterday, selling everything they have because they watched some podcasts, right? And then going all in on Bitcoin and then coming to us and borrowing against this yesterday bought Bitcoin. That would be risky and maybe a little bit unreasonable. And that is why the regulators, they give us some rules to make sure that, we are not giving the loans to those kinds of people. Because again, this product is not really for traders. This product is for people who, are already in the profit. Because if you held, let's say you started buying in 2020 or 2022, if you've been buying and stacking sats since then, you're in the profit already, right? So even potential liquidation would be like a profit taking anyway. So what regulator says is basically saying, make sure that you're serving this product to people that are real hodlers, long-time hodlers. They are really in it for a long term, and they are not just looking for leverage. And they bought Bitcoin yesterday, and they are trying to leverage and go all in, because that would be a risky, and that would could end up with adverse scenario for the consumer. So that is why, as Xapo Bank, we are looking at our customers and we are pre-approving up to the 40% of LTV based on a holding balance and behavior. And we have controls in place that make sure that, we are not giving, we are protecting not only ourselves, but also the consumers, the customers, the members.
Great stuff. And I think I have time for one more question, and I'm going to make you retread some ground you've already covered. But a lot of the questions we received here have been on things like, managing margin calls, liquidation risk, flash crashes. Can you quickly talk us through again how we're protecting against those things happening?
Yes. So as you said, we rehashed it a little bit. So we talked about, so first of all, let me start with this. We are not rehypothecating collateral. So that Bitcoin sits there. Okay. Then what we do is we are giving you up to 40% of LTV. So that means it's a quite low risk thing. That liquidation price is around 40K right now. So Bitcoin would need to drop from where it is today, right now, as we speak, to 50-ish K. I mean, it can happen. It's rather unlikely, but it can happen. Now, between this and now and then, right, on the path to liquidation, let's say if Bitcoin tanks really to 50K, we have a liquidation engine. So we call it liquidation engine, is like a technical term, but it's basically our system that is constantly monitoring in real time all the loans, the whole loan book of every customer in real time. All the LTVs are being recalculated. We are using the very redundant and robust price sources. We have really like the infrastructure and the whole product is built in a setup that is complying with the highest regulatory standards. And so based on that, we can evaluate, unlike, for example, valuation of your house or valuation of stocks, which when market is open, we can tell. When market is closed, well, can we tell? So we can tell at any point in time what exactly that LTV is. And because of that, we can be very, very quick and very reactive to it and proactively notify customers along the journey what's happening with their loan. So let's say if it were to happen, and let's say we crashed to 70K, then if you took the loan at 120 and you go into 50s and 60s in terms of LTV, you would be messaged, in using multiple channels. There may be some customer success reach out, because we do have those customer success managers, those account managers that are helping. You would be definitely know that something is happening, and to protect you, we would ask you to either top up additional collateral or start repaying, because maybe you can repay a little bit, and that can already bring that LTV down to the healthy level. Now, if nothing happens from your side, so you're sort of maybe you cannot answer the call, or maybe you're outside, or you don't have access to the internet, because the LTV is low, there still would be some time to act. And as we go into 70s, our push notifications, in-apps, and emails and customer success reach out would become more, intense, let's say, because then there is less and less space and less and less time to act. And at some point, so I would say the setup, because you have 40% LTV, there is lots of space and cushion and time to act. Unlike for loans where you have 70% LTV, that's your starting LTV, and then any dip in price could potentially liquidate. So I hope that answers your questions, Jan.
Yeah, that's pretty comprehensive. Thanks, Piotr. We're basically out of time. So Joe, before I wrap this up, any final words from you?
Thanks so much, Ian and Piotr. I mean, very quickly, if you can just answer this one for me, Piotr. So the margin call comes in, and the price, whatever has happened, something needs to occur. Do we liquidate everything all at once, or are we just going to liquidate whatever needs to be liquidated in that very specific moment to cover the new LTV?
Yeah, that's actually a great point, Joe. I forgot to mention. So right now we are only liquidating, and that's the way the setup is there. We are only liquidating the applicable amount of collateral that is needed. So we are not selling everything. We are not fire and selling the whole collateral. We are only selling what is needed to cover the outstanding balance, right? And that might be at 80%, that might be 83%. It's just, it means that you will be left in an unfortunate scenario that, of course, we don't want, right? The liquidation. In an unfortunate scenario, if it were to happen, you would receive your Bitcoin back in most cases, because we'll just sell whatever is applicable and then return the Bitcoin back to you. So this will get unlocked in the Bitcoin vault. Now, what I'm thinking, and that's a very good point that I forgot to mention on the roadmap, we are indeed thinking about introducing the partial liquidation. So we could we can think about this. It could be either, opt-in feature or something, but I think it's a standard in 2025 to offer some kind of version of partial liquidations. So the idea here is, instead of when the liquidation trigger hits, instead of liquidating the full collateral and closing the loan, the idea is to liquidate just a little bit needed to decrease and bring the LTV back to the healthy level. And this is way better from a customer perspective. I mean, as a user, I would love to have it. And I think, I will look at the roadmap, but I think at some point, we'll plan to add that as well.
Thank you, Piotr. Great answer. Unfortunately, that is all we have time for, but thank you, Joe, for co-hosting. Thank you, Piotr, for all your awesome answers, but most importantly, thank you to all of you who have listened in. It's been a pleasure having you with us. Final reminder, Bitcoin-backed loans are now live inside the Xapo Bank app. Check them out and stay tuned for next month's Xapo Talks. Same time, same place. more or less. New topic, though, I'm sure, although there's still so much here we could cover on Bitcoin loans and flexibility. So don't be surprised if we come back and do this one again. Anyway, thanks, everyone. If you have any follow-up questions, do drop them here. Drop the Xapo Bank account a message. We do monitor those. We do respond, and reach out via the app if you've got an account with us. That is all from me. Thanks again for joining. We'll see you again next month. Bye-bye.